Nobody expected this. Just when investors believed silver was settling into a predictable range, a major political development sent shockwaves across global markets. Donald Trump's latest move has suddenly changed the conversation surrounding trade, inflation, manufacturing, and precious metals. Some investors believe this could become one of the biggest turning points for silver in years, while others think the market is overreacting. The truth is far more interesting than either side realizes. Today we are breaking down what actually happened, why silver reacted the way it did, and what this could mean for gold and silver prices in the weeks ahead. Make sure you stay until the end, because one overlooked factor could determine where precious metals go next. Financial markets never move because of a single headline. Every major price movement is usually driven by a combination of economic expectations, investor psychology, and changing global conditions. That is exactly what we are seeing today as traders analyze the impact of the latest political developments coming from the United States. Whenever major policy announcements create uncertainty, investors immediately begin reassessing risk. They ask whether inflation could rise again. They ask whether supply chains could become more expensive. They ask whether the Federal Reserve might eventually change its interest rate outlook. Those questions matter because every one of them influences the future direction of gold and silver.
Good to finally meet in
Silver
person.
occupies a unique position within financial markets. Unlike gold, silver is both a precious metal and a critical industrial resource. This means its price depends not only on investor demand, but also on manufacturing activity, technological innovation, and global economic growth. That is why every major political decision affecting trade, manufacturing, or industrial production immediately attracts attention from silver investors around the world. Even before economic data confirms the impact, markets begin pricing in future expectations. Recent developments have created exactly that situation. Investors are now debating whether new policies could reshape international trade relationships, increase production costs, and influence future inflation. Those possibilities matter because inflation has always played an important role in the precious metals market. When inflation rises, purchasing power declines. Investors often begin searching for assets capable of protecting long-term wealth. Gold has traditionally served that role for generations. Silver frequently benefits as well because it combines monetary value with industrial demand. The latest political developments have also renewed discussions surrounding domestic manufacturing. Governments around the world continue encouraging local production of strategic industries, including technology, renewable energy, semiconductor manufacturing, and critical infrastructure. Nearly every one of these industries depends on silver. Silver remains essential for solar panels, advanced electronics, electric vehicles, medical equipment, telecommunications, and artificial intelligence infrastructure. As investment in these sectors continues expanding, long-term industrial demand remains one of the strongest foundations supporting the silver market. At the same time, investors continue monitoring the Federal Reserve. Interest rate expectations remain one of the biggest drivers of precious metals prices. Higher interest rates generally strengthen the US dollar while creating temporary pressure on gold and silver because investors can earn higher returns from interest-bearing assets. However, markets rarely wait for official policy changes. Investors constantly attempt to anticipate what central bankers may do next. If political developments increase inflation, markets may begin adjusting expectations long before any Federal Reserve meeting takes place. That is one reason why recent events have attracted so much attention. Investors are not simply reacting to political headlines. They are attempting to understand how those headlines could influence inflation, economic growth, interest rates, and the value of the US dollar over the coming months. The currency market remains another critical piece of this puzzle. A stronger US dollar often creates temporary challenges for precious metals because international buyers need more local currency to purchase the same amount of gold or silver. A weaker dollar usually provides additional support by making precious metals more affordable around the world. Every shift in Federal Reserve expectations therefore influences both currency markets and precious metals simultaneously. This relationship has repeated itself through multiple economic cycles over the past several decades. Another important factor involves investor confidence. Markets perform best when uncertainty remains low. Whenever uncertainty increases, investors often begin reducing exposure to higher-risk assets while increasing allocations to defensive investments. Gold has historically benefited from this pattern. Silver often follows, especially when industrial demand remains healthy. Many analysts believe the current environment contains several competing forces. On one side, economic growth has remained surprisingly resilient. Employment continues supporting consumer spending, while businesses continue investing in new technologies. On the other side, inflation remains above long-term targets. Government debt continues expanding, and geopolitical uncertainty remains elevated. Those competing forces explain why financial markets have experienced increased volatility. Investors are constantly adjusting expectations as new economic reports become available. One strong employment report can change interest rate expectations overnight. One inflation report can completely alter market sentiment. Central bank buying also continues strengthening the broader precious metals story. Around the world, monetary authorities have steadily increased gold reserves over recent years as part of long-term diversification strategies. How much exposure do we have? While central banks focus primarily on gold, their actions reinforce confidence in precious metals as strategic reserve assets. Silver investors are paying attention because strong confidence in the broader precious metals sector often creates positive momentum across both markets. Although silver follows its own supply and demand dynamics, investor sentiment frequently moves together with gold. Supply conditions represent another important consideration. Developing new mining projects requires significant investment, regulatory approvals, and years of construction. Even if demand suddenly increases, supply cannot expand overnight. This creates the potential for stronger price movements whenever industrial demand and investment demand rise simultaneously. History demonstrates that silver has experienced periods of extraordinary volatility. During previous precious metals, bull market silver often lagged behind gold early in the cycle before eventually producing larger percentage gains. This historical pattern continues attracting attention from long-term investors. At the same time, caution remains necessary. Short-term market reactions do not always become long-term trends. Investors must separate emotional headlines from lasting economic changes. That requires examining inflation, employment, manufacturing, currency markets, Federal Reserve policy, and global demand together rather than focusing on any single event. Professional investors understand that successful investing depends on analyzing the complete picture. They recognize that politics influences markets only when policies eventually affect economic fundamentals. That process often takes time. Markets therefore remain highly sensitive to every new piece of information. This explains why today's developments have generated so much discussion throughout the investment community. The latest political announcement may represent much more than a single headline. It could become one of several catalysts influencing inflation, trade, manufacturing, and precious metals over the coming months. But this is only the beginning of the story. Once we examine how these developments interact with global supply chains, industrial demand, and the Federal Reserve, the outlook for silver becomes even more surprising than most investors currently expect. As investors dig deeper into these developments, another important question begins to emerge. Why did silver react so quickly, while many traditional economic indicators have not changed overnight? The answer is that financial markets trade on expectations rather than current reality. Investors are constantly trying to predict what may happen months before official economic reports confirm those changes. Whenever markets believe future inflation could increase precious metals, immediately attract greater attention. If businesses expect higher production costs, they often adjust prices. If consumers expect higher prices, they change spending habits. Those expectations alone can influence inflation before actual data begins moving. The latest political developments have revived discussions about domestic manufacturing, trade relationships, and supply chain resilience. Businesses around the world are evaluating whether future production costs could rise and whether imported materials may become more expensive. These concerns directly affect industries that consume large amounts of silver. Silver remains one of the most important industrial metals in the modern economy. Every major technological transition depends on it. Solar energy continues expanding across global markets. Electric vehicle production continues increasing every year. Artificial intelligence infrastructure requires advanced electronics. Semiconductor manufacturing depends on highly reliable conductive materials. Silver remains essential for nearly all of these industries. This creates an important difference between silver and many other commodities. Industrial demand continues growing even while investors also purchase silver for wealth protection. When both forms of demand increase together, silver has historically experienced some of its strongest rallies.
We are following breaking economic news as the markets react.
Gold often leads the precious metals sector because investors recognize its long history as a safe haven asset. Silver usually follows once confidence begins returning to the broader market. During previous bull markets, silver frequently delivered larger percentage gains after initially lagging behind gold. Another important issue involves inflation expectations. Even though inflation has slowed from previous highs, prices across many sectors remain significantly above historical averages. Housing, transportation, insurance, healthcare, and everyday living costs continue placing pressure on consumers. If new economic policies increase manufacturing expenses, transportation costs, or import prices, investors may begin expecting inflation to remain elevated for longer than previously believed. Those changing expectations could influence Federal Reserve policy in ways that directly affect precious metals. Interest rates remain one of the biggest variables. Higher interest rates generally strengthen the U.S. dollar while creating pressure on gold and silver. Lower interest rate expectations usually produce the opposite effect. Investors therefore analyze every economic report, searching for clues about future monetary policy.
Yes, I agree.
Employment data
we should
remains
discuss the final
especially
terms
important.
over lunch.
A strong labor market gives policymakers greater flexibility to maintain restrictive policy. Slower hiring or weaker economic growth could encourage future rate reductions. Precious metals markets often react well before official decisions are announced because investors constantly attempt to position themselves ahead of changing conditions. The U.S. dollar continues playing a central role. A stronger dollar increases purchasing costs for international buyers, while a weaker dollar often supports global demand for precious metals. Currency markets therefore remain closely connected to interest rate expectations, inflation data, and overall confidence in the American economy. At the same time, government debt continues attracting attention from professional investors. Public borrowing has reached historically significant levels, while higher interest rates increase financing costs. Many economists believe these long-term fiscal pressures will remain an important theme over the coming decade. Gold has historically performed well during periods when investors become concerned about currency stability, government finances, and long-term purchasing power. Silver often benefits as investment demand spreads across the precious metals sector. Central bank buying also continues reinforcing long-term confidence in precious metals. Monetary authorities across multiple regions have steadily increased gold reserves as part of broader diversification strategies. Their purchasing decisions reflect long-term planning rather than short-term speculation. Although central banks primarily purchase gold, their actions strengthen overall confidence in precious metals. Investors often interpret sustained institutional demand as evidence that strategic value remains strong despite temporary market volatility. Market psychology represents another powerful force. Financial markets frequently overreact to both positive and negative headlines. Fear encourages investors to sell. Optimism encourages investors to buy. Professional investors attempt to remain focused on long-term fundamentals rather than emotional market swings. History repeatedly demonstrates that silver experiences significant volatility throughout every major market cycle. Temporary corrections often test investor confidence before larger trends eventually continue. Those periods create uncertainty, but they also create opportunity for disciplined, long-term investors. Supply conditions remain another important factor supporting silver. Opening new mining operations requires years of planning, environmental approvals, infrastructure development, and enormous capital investment. Production cannot simply increase overnight whenever demand rises. This supply limitation has historically contributed to stronger price movements whenever industrial consumption accelerates. Geopolitical uncertainty continues adding another layer of complexity. Ongoing international tensions, energy market disruptions, shipping challenges, and changing trade relationships all influence investor confidence. Financial markets dislike uncertainty because uncertainty increases risk. Whenever uncertainty rises, investors frequently increase allocations toward assets perceived as stores of value. Gold has maintained that reputation for generations. Silver often benefits because investors seek broader exposure to the precious metals sector while industrial demand remains healthy. One fascinating pattern from previous market cycles deserves attention. Many of the strongest precious metals rallies began while public opinion remained skeptical. Investors questioned whether inflation would continue. They doubted economic forecasts. They assumed higher interest rates would permanently weaken precious metals. Yet, as expectations gradually changed, market momentum shifted much faster than most participants anticipated. The same possibility now exists once again. Markets remain divided. Some investors expect stronger economic growth, while others prepare for slower expansion. Some expect inflation to continue easing, while others believe price pressures may become more persistent. This uncertainty creates an environment where every new economic report has the potential to reshape expectations. The latest political developments have therefore become much more than a simple headline. They represent another variable entering an already complex economic picture.
Get out of the South Asian
Inflation, interest
now.
rates, manufacturing, trade, currency markets, and investor confidence now intersect in ways that could influence precious metals throughout the coming months. The biggest question now is whether these changing expectations will eventually develop into a lasting trend. The answer depends on several critical economic forces that are only beginning to unfold. Once those forces become clearer, investors may discover that the recent movement in silver was only the first chapter of a much bigger story. The final piece of this story may prove to be the most important. Markets are now entering a period where expectations can change very quickly. Every new inflation report, every employment number, every manufacturing survey, and every Federal Reserve statement has the potential to reshape investor confidence almost overnight. This is exactly the type of environment where precious metals have historically experienced major moves. Financial markets never remain focused on the present for very long. Investors are always trying to look ahead. They attempt to understand where interest rates may be 6 months from now rather than where they are today. They try to estimate future inflation instead of current inflation. They evaluate tomorrow's risks instead of yesterday's headlines. That is why the recent political developments have attracted so much attention. Investors are asking whether new economic policies could eventually influence manufacturing costs, global trade inflation, and monetary policy. Even if those changes take time to develop, markets begin adjusting expectations immediately. Silver may become one of the biggest beneficiaries if industrial investment continues expanding. Renewable energy projects continue increasing around the world. Solar panel production continues reaching new records. Artificial intelligence infrastructure requires advanced semiconductor technology. Electric vehicle production continues growing across global markets. Every one of these industries depends on silver because of its unmatched electrical conductivity and reliability. Unlike many industrial commodities, silver also benefits from investment demand. During periods of uncertainty, investors often increase exposure to precious metals while manufacturers continue purchasing silver for production. This combination creates a unique balance that few other assets possess. Gold remains equally important because it continues serving as one of the world's most trusted stores of value. Whenever confidence weakens, investors frequently increase gold holdings as protection against financial uncertainty, inflation, and currency risk. If gold begins attracting stronger investment flows, silver often follows with even greater momentum. The Federal Reserve will remain one of the biggest influences moving forward. Every speech, every economic forecast, and every policy meeting will shape market expectations. Investors understand that even small changes in monetary policy language can influence bond yields, currency markets, and precious metals. The US dollar also deserves close attention. If expectations begin shifting toward lower interest rates, the dollar could weaken, while gold and silver receive additional support. If the dollar remains strong, precious metals may continue experiencing periods of short-term pressure. These relationships have repeated themselves throughout modern financial history. Government debt represents another issue that cannot be ignored. Public borrowing continues reaching historically significant levels, while financing costs remain elevated. Many economists believe these long-term fiscal challenges will continue influencing monetary policy and investor confidence for years to come. Central banks appear to agree that precious metals remain valuable strategic assets. Around the world, monetary authorities have continued adding gold to national reserves despite changing economic conditions. Their actions demonstrate that long-term confidence in precious metals remains strong even when short-term market sentiment fluctuates. Supply conditions may also become increasingly important. New silver mining projects require years of development before production begins. If industrial demand continues expanding while investment demand increases, available supply could become tighter than many investors currently expect. History shows that when supply struggles to keep pace with demand, price movements can accelerate rapidly. Geopolitical uncertainty remains another major consideration. International tensions, trade disputes, energy markets, and global supply chains continue influencing financial markets. Investors cannot predict every future event, but they understand that uncertainty often increases demand for assets viewed as reliable stores of value. History provides valuable perspective during periods like these. Silver has experienced dramatic rallies after long periods of consolidation. Gold has repeatedly recovered after temporary corrections that convinced many investors the bull market had ended. Markets often move in ways that surprise the majority because expectations eventually become too optimistic or too pessimistic. Professional investors recognize this pattern. Instead of reacting emotionally to every daily headline, they study broader economic trends. They monitor inflation expectations, interest rates, industrial demand, central bank activity, government debt, and global capital flows.
We should discuss
this wider perspective often reveals opportunities that short-term traders overlook. The current market contains many of the same ingredients that supported previous precious metals rallies. Inflation remains above long-term comfort levels. Industrial demand for silver continues expanding. Central bank confidence in gold remains strong. Government debt continues growing. Global uncertainty remains elevated. Interest rate expectations continue evolving with every new economic report. None of these factors guarantee immediate price increases because financial markets always experience volatility. Corrections remain a normal part of every investment cycle. However, long-term investors often view those periods differently. Rather than seeing only short-term weakness, they evaluate whether the larger economic story continues supporting their investment thesis. The latest political developments have added another important variable to an already complex financial environment. Whether these policies ultimately strengthen or weaken precious metals will depend on how they influence inflation, manufacturing, economic growth, currency markets, and Federal Reserve decisions over time. One lesson remains consistent throughout history. Precious metals have repeatedly demonstrated their ability to recover when market sentiment becomes excessively negative. They have also reminded investors that the biggest opportunities often appear during periods of uncertainty rather than periods of confidence. For silver investors, the coming months could become especially important. Industrial demand continues growing across multiple sectors, while investment demand remains closely linked to inflation, interest rates, and global confidence. If these powerful trends begin moving in the same direction, silver could experience significant momentum. Gold investors will also continue watching every major economic report because inflation, employment, Federal Reserve policy, and the US dollar remain closely connected. Each new piece of information will help shape expectations for the next phase of the precious metals market. Whether the recent reaction becomes the beginning of a larger trend or simply another chapter in an ongoing cycle, one thing is clear: the global economy is entering a period where flexibility, patience, and informed decision-making will matter more than ever. Thank you for watching. If you enjoyed this analysis, please like this video and subscribe to Silver and Gold Watch for more updates on gold, silver, inflation, the Federal Reserve, and the global economy. Turn on notifications so you never miss our latest market insights. I would also like to hear your opinion. Do you believe the latest political developments will push silver significantly higher, or do you think more volatility lies ahead before the next major rally begins? Share your thoughts in the comments because your ideas help make this community stronger. Until next time, stay informed, stay patient, and keep watching the markets because the next big opportunity often appears when very few people are expecting it.